Hey, everybody, it's me. Just give me a thumbs up in the chat if you can hear me okay. Somebody let me know. Can you hear me? Give me a yes, no. Excellent. Welcome, everybody. You know who I am. I appreciate every single one of you who is coming to join me, and we're going to have a chat about peer-to-peer lending. Hi, Martin. Let me just see who's online. Peter, MacTavish. That sounds like a very Scottish name. If I'm wrong about that, MacTavish, you have to tell me. Very stereotypical, but it seems like you might be Scottish. Hi, Steve, Graham. Greetings to you. Thank you for joining us. So purpose of this live stream is I'm going to be visiting some of the peer-to-peer companies next week, starting on the 16th of September. And I'd like to get your feedback about what it is that you would like to know from the companies, and some questions about some of the things that are concerning you right now, maybe some of the things that you would like to see added or taken away from the peer-to-peer companies that you use. Most of the companies, well, nearly all of them that I go visit are very receptive to comments, and they really want to provide you with the best service they can, and they appreciate any feedback that you have to offer. So what I tend to do is I go to the companies and I do a Q&A, a question and answer, which is a combination of both your suggestions as readers of my website and also things as an investor that I have questions and queries about. So I'm going to tell you who I'm going to be going to see in a little bit. We'll just wait and see if some more people come on so I don't have to repeat myself over and over again. But one of the companies that I'm sure you're going to have some questions for is RateSetter. And I know a lot of you are invested in RateSetter, as I am invested in RateSetter, and they've made some pretty big changes to their investment products over the last week. And I've been getting a lot of emails about what does that mean? What are those? Why are they doing this? And there's some really things that I'm not too clear about with their changes, which is why I'm going to see them. I'm going to sit down with David Battersby and Mario, who is the, I think, CIO, Chief Investment Officer there. And we're going to have a chat about the new products. And I really want to find out what it is that they are doing with those products. Now, part of me, and this is just my opinion, I think that liquidity is becoming a big thing in peer-to-peer lending because of what's happening with Funding Circle. For those of you that are in Funding Circle and probably have put in to exit or to try to get some of your funds out, you're seeing that the wait times are increasing and increasing. And back when I started investing in Funding Circle, it was, within a day or 2 days, I could sell a loan and expect to receive some money back from that loan. Now it's changed. We're at 110 days maybe out now. And there's this little policy that they have in Funding Circle, whereas if you if you put something for sale up and it doesn't sell for 120 days, that they can take it off the market. Personally, I haven't seen them do that. I think it's just something they have in their terms as a barrier for them to be able to have some reason to exit people's sales without selling it, but I haven't seen it actually used. If anybody has been more than 120 days on Funding Circle with something for sale and have found their sale to be canceled, please put it in the chat comments, because I'd be very interested to see what your experiences are. I've had some stuff up for sale on Funding Circle myself, and incidentally have been suffering from exactly the same length of time sales that you have. So I would like to hear about that. But yeah, that's my question for a RateSetter, is going to be about this liquidity that they're attempting, that they are going to be able to offer. Do I think it's going to make any difference to the liquidity? It's hard to say. I mean, you never know with these companies until after they've implemented things and given it some time to run through the system and see what happens with it. But I personally haven't had too much issues with rate setters being able to sell out when I've needed to. So I do like the idea that they're spreading the money across their loan books instead of into certain particular sections. There is some confusion about how do the legacy products work with the 1 and 5 year products. And there's also some questions about your money being reinvested back into the product that you were invested in. So if you're in a 5 year product through rate setter and you receive interest from that or a capital repayment, that the money goes right back into that same product. And then in order to get out of it, you have to pay the fee to get out, which doesn't make a lot of sense to me, but I want to find out why it is they're doing that. Again, I think it's for liquidity reasons, but I'm meeting them on Wednesday the 17th or 18th, Wednesday the 18th. We'll talk to them. So I'm just going to read some of your comments here. If you have any questions or any things that you're struggling with your peer-to-peer lending or investing, just pop it in the comments and I'll go through and I'll give you my best opinion. Hold on one second. I'll be right back. Anyway, sorry about that. I'm at my house here and the dog, this is my dog. She tends to go a bit crazy when the doorbell is rung. This is Harley, by the way, Harley. People think I'm saying Holly. She's the official mascot of Financial Thing, so she gets a bit rowdy. Anyways, yeah, if you have any questions or concerns about your peer-to-peer lending or investing, some of the companies that you're using that you want me to give an opinion on, happy to do so. Hey, come here. Sorry about the dog. So I'm just going to read your comments. Funding Circle, this is from Martin up in Leeds. Funding Circle told me last week that they were looking to new terms to ensure that the 120-day cancellation thing would not happen. Yeah, I don't see what sense it would make for them to even execute a 120-day release of sale. It doesn't, I mean, if somebody wants to sell something, why would they cut it off? I really don't understand that. I've never been able to get into their offices. I have tried to get a Q&A with them and go visit them, and they just have never really accepted that offer for me to come in. Could be a reason why. Maybe they don't want to show the transparency that I often ask difficult questions when I go visit these companies, and they don't want me to come in. I don't know what the reason is. But yeah, I'm not had any success. Peter Vince received a sale from Funding Circle today after 105 days. So Peter, my question to you is, were you able to sell 100% of what you had put up for sale, or was that a partial sale? So if you can answer that, that'd be great. I'm sure other people would want to know. P2B used to be a very simple concept. This is Steve. Now companies such as Wellesley are offering more complicated products. Is this just a way to fleece those investors? I haven't looked at Wellesley's products in a while. The last time I looked at them, they were doing these mini bonds, and I'm not a fan of mini bonds. I would tell you right now that all you're doing when you're taking a mini bond is you're loaning money to the company that's holding the mini bond. So if you put money into Wesley's mini bond and Wellesley goes out of business, you have a very high potential of losing your money because it's not secured by anything. So it's just like a corporate bond that you would buy on the stock market, and I've never been a fan of those. The reason being is if you lend money to a corporate company and they have issues and the company does end up going out of business, you are going to be at risk of losing all of that bond money because it's unsecured. They're absolutely unsecured. So same with Wellesley. As far as I know, if there's a new product that I've missed that's more peer-to-peer, I divested from Wellesley a long time ago. So yeah. I don't think they're trying to fleece anybody, Steve. I would hope they're not trying to fleece investors. I mean, there's always a chance that people are trying to do that, but I think they're just trying to figure out a way to get their customers' confidence back, because when a company offers a product, like Wellesley used to be a really great peer-to-peer lending company. I used them. They were one of my early investments, and for some reason they got away from peer-to-peer. I think they probably had some financial issues, and then they started introducing these other products to try to get the consumers' confidence back. And not sure they're trying to fleece anybody. Who knows? Martin said he phoned RateSetter about the new system. They seemed confused about how the ISA would work and if it was being redesigned. Yeah, that's going to be one of my questions. I'm going to ask them to get a better understanding, because some of that changes are confusing to me too. And so I'm going to find out next week about exactly how RateSetter's ISA is working and how their regular products are going to work. So if you have questions, for RateSetter, please put them in the comments. I will present your questions, unless they're really stupid questions like, what do the RateSetter employees eat for lunch? I'm probably not going to ask them that, but if you have some questions that are serious about your worries about their new product changes, then put them in the comments. I will type them up and take them over there next week. And I'm not sure if they're going to let me videotape. The last time I went, they said they would not be on video, but they do let me record the audio so I can transcript it, and I'll just put that into an article and then put it into the review too, so you can get all of your answers. I think some of the employees are confused about RateSetter's changes, because it is a bit confusing. Let's see, Paul, I think you can have your interest paid into the rolling account, so you should be able to get it at fee-free. Yeah, Paul, I've heard different opinions on that. The way they have it in the advertised on RateSetter's website, whatever you're invested in the new product will go right back into that product. But if you're in the old legacy product, like you're in the 5-year legacy product that's existing, you can have that money go back into your holding account. So you just want to check on that. If you're a new investor to RateSetter too, and you don't go into the old products, which you won't, if you go into the 5-year, then as far as I understand, that money, once it's repaid in interest, is going to be automatically reinvested back into the 5-year product, or whatever product you're in. And if you're in one of the products that charges fees to exit, that's the only way you'll be able to get your money out. You'll have to pay that fee. So 71 says, 7100, be grateful if you didn't buy shares in Funding Circle, offers price at 440 PA, now trading at a little bit over 100. Yes, no surprise there. I mean, fundamentally, Funding Circle on paper is a losing proposition. They are operating at a loss because they're in growth mode. Obviously, they're having some issues with the liquidity. So one of my readers sent a message to me saying that 100p is about where Funding Circle should be trading if you look at the fundamental financials on paper. I did not buy any Funding Circle shares, nor would I have done. I don't buy shares in individual companies, and I think some of the companies are risky propositions from a shareholder perspective. So Peter, you said Peter Vince put up some of his Funding Circle loans for sale, and he got about 80% back of his money after 105 days. That's positive news. I mean, there's been a lot of doom and gloom about Funding Circle and the amount of time it's taken to get money back. So you got 80% back. I would say that's a good sign. Not perfect. One thing to remember too about selling and exiting, none of these companies ever guaranteed you'd be able to get your money back out. That was not what peer-to-peer lending was about. It was a convenience that was offered. You know, RateSetter does a thing called a rolling account, which a lot of people say is like easy access. It was only ever as a convenience. It was never guaranteed. And there's always a chance that any of these companies that have these types of rolling accounts, you won't be able to get your money back out because that's not what they were designed for, and they're not like instant access accounts. So some people use them like that. I don't tend to think of them like that because of that reason. By the way, Funding Secure has announced a 30-day access account. I'll talk more about that if you haven't heard about that, but they just announced that last couple of days. McTavish says rate setters seem to have gone out of the way to make their new website hard to understand. Yeah, they could definitely make it easier, and that's something we're going to talk about when I go visit them next week. Hi, Dale. Nice to see you, Dale Potter. Any relation to Harry? Bad joke. Recently, we've seen Lendy go under. What are the warning signs of a platform about to go bad that investors or potential investors to look out for? Look at my website. I usually try to keep abreast of any potential issues. Lendy was a tricky one because they put a very good facade about what was going on there, and they were even telling me, I had some access to some of the employees, and they said, yeah, we're handling all the defaults. Everything is going well. And next thing I know, boom. There's a lot of people in the inside of the industry, but who were telling me Lendy was going to go under, but they were telling me a year and a half before, and they were also owners of other peer-to-peer lending companies. So, they're biased, aren't they? It's really hard to know who's actually telling you the truth or not. And they don't necessarily have any inside information other than what we have or what you have. But you can also read the forums and be in communication with the companies. If you have worries that you feel like something is going on, I would email them, see what their response times are like, call them up, see if they're answering the phone, see if they're giving you runaround questions, runaround answers to your questions. I think that's a good indication. But, peer-to-peer is an investment, so you're always going to have a potential that a company could run into difficulty. Let's see. Again, if you have questions, please give me a thumbs up on the video, to like it and subscribe to the channel. It helps me out a lot. I'm trying to grow this channel and my business, so anything that you can do, hit me with the thumbs up if you like it. Hit me with a thumbs down if you don't. If you don't like what I'm talking about, let me know in the chat. I'm always open to criticism, which I do get sometimes, by the way. I'm a very transparent person. I had an email from a reader recently telling me that I was the devil when it comes to information, and not sure why he didn't say who he was or anything, but it happens, and cannot please all the people all the time. So I'm just trying to give you value. So please hit the thumbs up and subscribe to the YouTube channel. Let's see. The difficulty selling loans with Funding Circle is compounded if you have an ISA and you want to move the ISA elsewhere. Could be impossible. Yeah, that's true. If you can't exit out of your loans, you can't transfer the ISA. That's the same with any peer-to-peer lending company, by the way. And any ISA, you have to liquidate everything inside the ISA to move that. So keep that in mind if you want to move a peer-to-peer lending ISA. I probably should write that on the website. That's something. Thank you for reminding me of that, Martin. I appreciate that. Rate setters seem to be tweaking their website constantly, bit by bit. The new product's beginning October, and they told me that current investors can continue exactly as before without upgrading. That is true. So if you're a current investor and you're invested in the legacy products, which is the rolling account isn't going to change at all, by the way, for new or existing investors. But if you're invested in 1 year and the 5 year currently, you will continue to be invested in those until those loans are complete, as far as I understand, and then you would be invested into the new products that are being rolled out on October the 3rd, 2019. But yeah, as time goes on, I think they're tweaking the website. They're trying to make things easier for people to understand. Because there's a lot of confusion. And the last thing rate setter wants is a bunch of people calling up confused about their products, because that just bogs down their customer service. So, Matt, 1980, how are you today, sir? He asks, are you looking to diversify away from property-backed secure peer-to-peer companies, given that property prices are dropping at the moment, hence the risk of property-backed is increasing? I would say I am looking to diversify more in general, not just away from property back, but also from the higher risk peer-to-peer company lending products. You've seen what's happening with Lendy. Funding Circle has some default issues. Moneything has default issues. These are the higher risk, higher reward companies. And as I've gotten a little bit more experience with peer-to-peer, I'm finding I have less stomach for high risk anymore. I don't have the stomach for it. So I'm diversifying to have more of an even portfolio where I don't have too much in any one particular company. And that would involve backing away from property backed. The asset securities are difficult in some respects because unless you're an expert at evaluating whether a property is valued correctly or is a good asset, it's going to be difficult for you to tell as a consumer which is a good and a bad loan. I'm liking more and more the auto invest companies like LoanPad, which takes your money and spreads it across all the different loans that they have, because I'm not an expert in property evaluating. I'm not. I have a friend who's a good friend of mine who is a surveyor in Manchester, and he's able to give me advice, but it's so time consuming. I mean, imagine if you're investing in 50 property loans. Can I evaluate 50 property loans and evaluate them correctly? Maybe, maybe not. So I'm diversifying away from that more, trying to look for the lower risk and the medium risk with a little bit of high risk, with like that triangle. You have a little bit of high risk, more of a medium risk in the middle, and then a base of low risk, because I think that's going to be important, especially with Brexit. Who knows how Brexit's going to affect lending in the UK? It could be a problem, may not be. But I think diversification is the key. And for anybody that had a ton of money in Lendy and was weighted, I had a reader that had 80% of their portfolio in Lendy, and I think 10% in collateral. It's not good news. You know, they wish they had diversified. So, Dale, what is your view on provision funds? Are they worth trusting? Are some providers better at this than others? Yeah, provision funds are really interesting because on the one hand, it gives a sense of safety, but on the other hand, some provision funds are really small and they could get wiped out by a single loan. If I think Lendy had a provision fund and they had a loan that was it 10 million pounds? That loan would have completely wiped out the provision fund. So the other downside of provision funds is it takes away from your returns as an investor, because money is being funneled into the provision funds in a lot of ways. That money could be distributed to investors at a higher return. I think that the companies I invest in, I trust that they're running the provision fund correctly. I don't know if you knew this, but Lendy had taken financing, I believe, against their provision fund. That was really not a good thing, and that came out later on. So, but the companies I invest in currently, I trust that they're running their provision fund correctly, unless I hear otherwise. That's all I can do is trust them. If I don't trust a company in peer-to-peer, I'm not going to invest through them. You know, that's it. I have to have some faith in that they're going to run their companies correctly. Like any company, you invest in a stock or a share in the stock market, you've got to have some trust that that company is being operated honestly and correctly. Otherwise, why would you invest in that stock in the stock market? You wouldn't. Martin, are the Funding Circle share dive likely to invest as investors with peer-to-peer? If the shares go to zero, it will affect you, because that means the company's not doing well. I would say keep an eye on it. It's definitely, I mean, I think that the price of the shares are where they should be right now. It's probably an accurate valuation of Funding Circle. Keep an eye on the share price. If it's dropping and dropping and dropping, I think there's a problem, but so far it seems to be kind of holding at that 100p level. Let's see what else we got. Michael Shaw, when you visit Cufflin, can you ask them why they do not offer the ISA on Select Invest? Yes, I will definitely ask them that. I think I asked them last time I was there, and they said that there was something they were trying to work out. They didn't have a particular reason. why. That was right when they were just releasing their ISIS, so they were trying to work out the kinks. Dale, have there been any recent changes to your top 5? I am going to update that top 5. No, not really. They're pretty much the same. It's been the same for a while. So I still like LoanPad. I really like what Lewis is doing over there. Rate Setter seems like they're on the right track. We'll see. Assets, I like what Stuart Law is doing. I know they've had some increases in defaults, but that's the nature of their business. They're lending to small and medium-sized businesses. They're going to have some defaults. As long as they can keep up on the default recovery, I'm happy to continue with them. Yes, you mentioned too Crowd Property. I had a really good chat with Mike Bristow from Crowd Property last week on the phone. And I do not currently invest with Mike and Crowd Property, but I am going to meet him on the 16th of September to talk to him more about what he is doing there. I like his vision. So let me know if you're invested in Crowd Property, because I'd be interested to hear your feedback. But I got some good warm and fuzzies from him, from Mike at Crowd Property. What are your thoughts on Property Partners' new fee structure? Does it indicate financial issues at the company? I don't think it does, but what I think it indicates is that they want to make a profit, and they know that they can't continue to not make a profit for an indefinite amount of time. And they came up with a free structure that would allow them to generate more income for the company and more revenue. Personally, I want a company to be profitable, even if it means that my returns are a little bit lower. I mean, what's the alternative? That they operate at a loss and go out of business? I don't want them to do that. So the returns are definitely going to be reduced with Property Partner. But what I like about them is they're pretty astute when it comes to their property investing. I got an email this morning saying they were looking to sell one of the properties in their portfolio at I think it was a 95% capital gain. So yeah, okay, you pay a little bit of extra fees, but at the end of the day, if they're able to continue to turn a profit, increase revenue, and make correct decisions with their property choices, then I don't mind taking a little bit less of a return. And Property Partner is a very, it's not really a dividend play. I mean, if you're getting a 3 or 4% dividend out of the shares that you own through your property shares, okay, 3 or 4%, is that really going to make a big difference? No, but when they sell the properties and hopefully they get the timing right 4 or 5 years down the road and they make some kind of capital return for you, that's really where your money is going to come. And that does involve risk. I mean, Property Partner is a bit of a riskier play because of that. If you're getting a 9% dividend, it would be lower risk, obviously, but they can't do that. So I don't think they have financial issues from what I can tell. How influenced are you by peer-to-peer's website ease of access color scheme? And I am, of course, sorry, this is Martin is asking me this question. How influenced are you, me, by a peer-to-peer company's website ease of access color scheme? And Martin says he is, but he doesn't know if it's wrong to be influenced by style or not. Maybe it is. I mean, it makes it a lot easier if the peer-to-peer company's website is easy to use and navigate. I remember when Funding Circle changed their website, and I hated it. You had to click on the little big, the squares to find out the information, and it flipped over, and it makes it a lot more fun to use it if it's simple. I do like LoanPad's website. I am influenced, but it wouldn't stop me from investing if the website was harder to use on Company A than Company B. If I like Company A more than Company B, I'd still invest in it. But yeah, I do like the look of LoanPad's website. Michael, do you think we should be concerned about MoneyThing? They seem to have quite a few defaults and a very few new loans. So concerned, look, defaults are never a good thing. I mean, let's call it what it is. MoneyThing was doing 12% investor returns to you and me. And one of the things about MoneyThing was we don't know what the spreads are, or we don't know what the borrowers are paying. If they're paying 25%, what does that say about the risk that the loans or risk categories are high? This is one of the problems that I'm seeing really with peer-to-peer is the spreads. I want to see those spreads being transparent. I want to know if I'm investing in a loan where I'm being paid 7%, what the heck is the borrower paying? Are they paying 20? Because if they are that, I'm not going to go into that loan because that risk is high up and I'm only getting paid 7%. I don't know that I would be worried about MoneyThing. I think what they did a few weeks ago or a couple of months was to say that they were going to start targeting more lower risk to medium risk loans. Sorry, scrap that, not lower risk, but they're going to be paying 9 to 10%. Do I know whether the borrowers are paying lower rates? I don't know. That's a good question. I hope that they would be, and we'll see. I keep an eye on MoneyThing. I've never visited with MoneyThing. I've tried to get a meeting over at their office, and I've never had success doing that, but I will still continue to try. Maybe it's the similarities between our names, like we're competitors, MoneyThing, financialthing, but I still have money invested through them. I am lowering my investment levels through MoneyThing just to diversify. I don't want the high risk anymore. So I do think MoneyThing is higher risk. Absolutely is. So am I concerned? I'm keeping a watchful eye on them, just like I am Funding Circle too. So I put them in the same categories. Paul says it's much easier to diversify in index funds, which is index tracker funds, than peer-to-peer if you want to invest in an ISA. They don't make it easy to spread your risk. Absolutely true. The way that our wonderful British government has things set up, you can only invest in one ISA per year. That's not good for diversification, especially if you're just starting out. You can transfer old ISA money into a different peer-to-peer, but if you want to do this current year's ISA, you got to put it in one peer-to-peer company. I personally wouldn't do it. I don't like that. I don't like the idea of having all my eggs in one basket, but I would much prefer go for an index tracker ISA because diversification is better. I don't use peer-to-peer ISAs myself, so for that reason. Matt, Property Partner is interesting as they're appearing to be maturing into a more traditional letting company rather than focusing on growth. Yeah, what I think will end up happening with Property Partner, and this is purely an opinion, no information based on this at all. I think they'll turn into some kind of a fund eventually, whereas all the money goes into one fund and you would receive a dividend. That's what Property Moose has done. Is that going to be a successful thing? I don't know. But that's what I think Property Partner will end up doing. I could be completely wrong about that. Tony says, which peer-to-peer companies show their spreads? Okay, the ones that show their spreads are the ones that show their loan books. And there isn't a lot. There's Octopus Choice and Land Bay. They are the two that I use that I know show their spreads, which is why I like them, because they're transparent. I know if I'm being paid 4%, that the borrower is paying 6%. And I know the risk is lower because a 6% borrower is much lower risk most of the time than a 20% borrower. Rate Setter used to have statistics about their loan book, which they no longer have. I don't know. I haven't looked at my loan contracts and whether those loan contracts on Rate Setter actually show you the spreads or not, if they show you what the borrower is paying. I know LendingWorks they show what their average APR interest rate that the borrower is paying. So that would be considered a spread, form of spread data. But there isn't that many companies that show the spreads. I don't know why they don't do it, but I think I had a conversation with a company called Pioneer last week, and they're launching. I don't know if they're in sort of a beta launch now right now, but they said that I think it was Pioneer or Crowd Property, I can't remember. But we talked about spreads and how important it was to be transparent, and a lot of the peer-to-peer companies are not showing that transparency. So I'd like to see more of that. Any crystal ball on what will happen with Brexit? I see that Martin Lewis is showing many warning signs about peer-to-peer now. In the past, he didn't seem too concerned. Yeah, let me tap into my ESP. Brexit will not happen in October, and Boris Johnson is going to not be the prime minister anymore, and he's going to move to America and become the vice president of the USA and team up with Donald Trump. I don't know. I don't think the Brexit's going to happen in October. Warning signs. Yeah, I said this last week or the last time I did a stream. If you're worried about peer-to-peer, you can exit out, sit on the sidelines, get back in after Brexit happens if you're really worried. There's no reason to stick it out. If it keeps you up at night, it shouldn't. If you're investing more money than you can afford to lose in peer-to-peer, then that's on you, right? I don't invest more money than I can afford to lose. The worst happened. I don't think that every peer-to-peer company is going to go out of business. They may have more defaults because of Brexit. The returns for us investors may fall. Is all going to go belly up? Who knows? Very unlikely. Could happen. I think you're going to see some companies bite the dust in peer-to-peer. Maybe some companies that aren't experienced in what they're actually doing, underwriting loans. They may be more experienced in tech than on the loan side. Hard to say. I don't have a crystal ball, so I don't know why Martin Lewis is. If Martin Lewis isn't invested in peer-to-peer, of course he would look at peer-to-peer and go, warning, warning, because all of the media outlets are saying peer-to-peer is risky and it's bad and da-da-da. What they don't tell you is where are you supposed to put your money exactly? You know, there's people invest in peer-to-peer are obviously finance savvy and to some degree. They know what the risks are. Hopefully most of you do. If you don't, you should be reading up on risk because it is an investment. You know, where are you going to get 10, 9, 12% on your money without risk? Come on, there's a reason that you're paid that much. So Philip Hammond is still showing as recommending Funding Circle on the Martin Lewis site. Maybe he's smoking something. I don't know who Philip Hammond is, but that is funny. Housing crowd doing their own developments. Is this safer than the bridging loans they offer? You talk about the last. You obviously talk about the house crowd. Safer. I don't like to use the word safer. So that depends on who is doing the bridging loan underwriting. Sometimes those bridging loans are not necessarily through the house crowd, but sometimes they come through brokers. And there's a lot more research that has been done before it's passed along to the peer-to-peer lending companies. So it depends on whether that loan came through their own sources from bridging or whether it's through a broker, how much knowledge on the underwriting side they have. I don't think it's necessarily safer or riskier for the development versus the bridging loan. What I do know is the house crowd does have some experience in development through, I believe one of their co-founders is a developer. So development experience is huge when it comes to, developing. If you have good experience developing, you have people in your office that know how to build stuff and do it right at the right price, then that's a lot better than somebody who has no idea what they're doing. So I think they have experience in doing it. I don't know that it's any safer or riskier than a bridging loan. What I do like about them doing their own stuff is in-house. They have control. If you have a developer that you gave a bridging loan to, you don't have any real control over that developer if they start having delay issues or contractor issues. That's on the developer's shoulders to figure out. And as a lender, or say the house crowd, they don't have any real effect and cause and effect on that. So from a safety aspect of that the development is controlled by them, that is a positive thing. They can move things along as needed, as they need to. Lottery numbers for Saturday, any number with a 2 or a 1, you'll probably win. Are there any new peer-to-peer platforms coming through of interest? Yeah, I haven't invested in them. Like I said, I have a meeting next week with Crowd Property. The chat that I had on the phone and what I've seen on my own research, they seem like they're doing some good things over there. Oh, by the way, just as an interlude, next week I'm going to visit RateSetter, LoanPad. Who else am I going to see? I should have written this down. RateSetter, LoanPad, Crowd Property. Trying to set something up with Lending Works, but it's still tentative. I believe Growth Street. Who else? And there was one other one. Can't remember. I'll tell you before the end of the stream. If you have any questions for those companies, please put them in the chat. And when I go see them, I will write them down. Cufflink, yes, thank you. Yeah, Cufflink's the other people. How could I forget Cufflink? If you have any questions for RateSetter, Cufflink, LoanPad, Crowd Property, Lending Works, yeah, put them in the chat and I will ask them when I'm in front of them for you. Let's see, lottery numbers. Yeah, we already went through that. So new peer-to-peer companies that are of interest. There's nothing, maybe Crowd Property, they're not new, they've been around for a while. I just haven't invested. I do like them tentatively. I'm excited to have a chat with Mike Bristow next week. Nothing new at the moment that's on my radar. Oh, the other company I'm going to visit, I believe we're trying to schedule a meeting, is Easy Money. So the branding is obviously very good, but I'm certainly not recommending them at the moment. We'll see. Yeah. Oh, Philip Hammond. Yeah, Philip Hammond was the Chancellor of Exchequer. You're right. I forgot the connection there. I thought he was some employee of Martin Lewis's. So, Chica Boy, good evening to you, Chica Boy. Chica Boy? Chica Boy? Chica Boy. Propland, don't have any experience with them whatsoever. And Chica Boy says has 9,000 in funding secure that you can't get out, as all his loans are in default. Yes, hopefully you will get some money back when those defaults go through recovery. Keeping my fingers crossed. I do have loans also in default with them. Some of them taking a hell of a long time. I have a loan that's over 1,000 days now, so 3 years. High nature risk of peer-to-peer lending, 12% loans. They are high risk. You're going to get defaults. Paul, you're very welcome. I will post those meeting results when I get back in front of a computer. When I can do it, probably will be the end of October. But I'll update the reviews as I get information about these peer-to-peer companies. And Chica Boy, you are very welcome. Yeah, so anybody that's out there who is considering peer-to-peer lending, check out financialthing.com. I have a cashback page. You can get some really good offers. Cufflink is my favorite offer at the moment. They're paying a £100 bonus on a minimum £500 deposit. It's a 20% bonus, and they you can only get that through my website because it's something I negotiated with them because I want people to try out the company. I think they're a good company and I like their vision. I like the people there. Check the cashback page out and score yourself some cashback because why wouldn't you? It'll increase your returns. Please hit the like, thumbs up for me and subscribe to the channel. Helps me out. I'll do more of these live streams when I can. I'm going to be traveling a little bit when I get to London. Trying to take a little bit of time to experience life, just from a personal standpoint, I've been building this online business, giving you guys free information through Financial Thing for the last, be coming up on 5 years. And yeah, it's challenging, this is a full-time thing for me, and building an online business is challenging because it's a lot of information that has to be updated, and staying motivated, working on my own has been challenging. So I'm going to take a little bit of time to go decompress and have some fun, but I'll also be working on the road. I will post anything that I find out on the reviews. So thanks for checking out the website. I appreciate each and every one of you. Please leave your comments. If you have any questions, put them in the chat. We'll probably go for another 5 minutes. 5 minutes or so. Let's see. Martin says, LendingWorks still has a paying in page which does not recognize a decimal point. My £500 credit turned into 50,000. Ask them why they haven't corrected it. Yeah, did you keep the 50,000? Martin, hopefully you gave him it back if you did get 50 grand. Matt says, just to add, having a good experience with Unbolted, been through a lot of loan defaults and selling at auctions, thus far good experience. Yeah, so Unbolted is cool because they really stuck to what they began their roots with, which is selling loaning on jewelry, which is really easy to liquidate. You just take it to a jewelry auction and it's gone. That's the beautiful thing. Property defaults take forever. So yeah, I agree. I've had good experiences. Thank you for helping us all to understand peer-to-peer lending and better. Yeah, you're very welcome, Chica boy. Jan Lee, what do you think about the new management of Funding Secure? Do you plan to visit the company? Yes, I actually have pretty positive. I think the new management really wants to fix the issues. Raj Kumar, they don't want to go the same way as Lendy has gone, so they're going to work as diligently as they can to get those defaults sorted out. I think the management has come into a mess and they're really doing their best to sort it out. They're not sticking their heads in the sand, so thumbs up to that. I will hopefully visit them in December if they'll have me, so we'll see. Might bring Holly, the dog, to London. Her name is Harley, like Harley Davidson. No, she is going to be off somewhere else. Somebody else is taking care of her. Sasha, Vanya, Mason, Mike Mason. Late, but wanted to mention the new concept from Rebs, that is rebuilding society. Of course, the lawn care guy has come at the best time, so let me move around here. So, Rebs, rebuilding society. See, microloans can be bought, which are guaranteed by the previous owner in case of default. Innovative. Yeah, I was never a big rebuilding society fan, but I also exited out a long time ago because I had some problems at the very beginning of my investment experience where I think 2 of the loans I invested in didn't make their first payments, and I think they loaned some money on a piece of property or to a shop, and the shop was closed down, was not even operational, so I just lost my confidence. But I've been in good communication with the Rebuilding Society CEO, and he's been trying to get me to retry out the platform again. I just haven't yet, but you know what? I'm probably going to give them another try. So why not, right? Because I think they've gotten some of the kinks worked out that they had before. And I'm always okay giving somebody a second chance if they're in communication with me and they're trying to rectify their errors. So not too bad with reps. They're working in the right direction. Jan Lee, you're welcome. Happy to answer your questions. Again, if you have any questions that you'd like to answer, you have any questions for RateSetter, LoanPad, Cufflink, Crowd Property, Lending Works, I'm happy to take those questions to them. You can email me at help@financialthing.com. You can leave a comment on this YouTube video. I will take those questions to the company. I will ask them whatever it is that you want. And usually they're very happy to answer those questions. So let's see what we got. Yeah, just also remember, what I give you is advice. It's just my opinion. I get it wrong sometimes too. Because a lot of the times I don't know what goes on behind closed doors of these peer-to-peer companies. So please don't think this is investment advice. I just tell you from my own experiences of the investing that I've done, because I want for you to have the same good experiences that I've had, and so you can avoid the problems that I've also had. I don't want you to lose money. I want you to be successful. And it's really important that I work with the companies too on the peer-to-peer side who care about your money, because some of the CEOs are very altruistic. They are giving people and they take it very seriously when they have your money in their hands. So don't think for a second that they don't care. Not all of them care the same way, but you know, some of the companies they really care about doing the right thing by you. Peer-to-peer is not all bad. Financial investing is not all bad. So I want the same for you guys to have this success. What about the 10% rule on peer-to-peer investment recommended by the FCA? So yeah, the FCA is recommending that people have a maximum amount they can invest in peer-to-peer, 10%. I don't see how they can enforce that. I mean, how does that even work? What are they going to do? Monitor your entire net worth and say, put a limit on what you can invest in peer-to-peer? They're doing that for risk reasons. They want people to understand what it is they're investing in. But you'll be surprised, a lot of peer-to-peer investors have no clue what kind of risk that they're getting into. You've got your 75-year-old granddad who sees a RateSetter ad on his computer and signs up thinking it's some kind of bank account, and then dumping his money in there without FCSS protection. I probably said that wrong, but the FCA wants to protect your average consumer, and they're putting these rules or trying to recommend these rules to protect peer-to-peer lenders. But there's no way to really enforce a 10% max limit. There's also, some of the peer-to-peer lending companies have questionnaires that the FCA has made them put into effect before you can sign up for an account. Are you a high net worth investor? Are you an advanced investor? Anybody can answer those questions, and it doesn't really do anything. It doesn't explain anything. It's just like a test that you put in the wrong answer, it fails you. But I don't see how effective that is about reducing people's risk and increasing their information. That's the FCA for you, though. I mean, you get any government-controlled or subsidized body involved, and they're probably going to make some decisions that they don't even know what they're making. They probably don't even invest in peer-to-peer lending themselves, so maybe it would be better for the FCA to have like lenders on the panel, like people like you and I, who can give them the real backside of the industry and the way it works and how we can inform people to be more educated on risk rather than some guy in a suit who has no idea. Sorry, I'm ranting, but it's my opinion. I mean, the FCA didn't do a very good job when it came to lending. They just authorized them and continued letting them move on. So they can't enforce the 10% rule, but it is good advice, really. Yeah, I think it's really good advice. I tell people that all the time. They say, how much of my liquid net worth should I put into peer-to-peer lending? My rule is I don't put in more than a maximum of 15%. Right now, I think I'm about 10. So I think 10% is probably a good number. Depends on your circumstances, though. Everybody's circumstance is different. If you're out there and you make £1 million a year and you have a fixed income of $1 million a year, then putting 20% of your fixed income into peer-to-peer isn't a big deal for you. But if you're a person that makes $30,000 a year and you're putting 20-30% in, that's a much bigger deal for you. So everything is based on individual preferences and situations when it comes to risk. Like what I consider high risk, you may think is not high risk, So you have to look at that. Let's see. Martin says, hopefully you can do a video chat on the 31st of October at 11. Why is that? Halloween night. Maybe I'll get dressed up in a Dracula outfit and do a live stream. That would be pretty funny. I wonder what's the 31st thing for you, though? Martin, is that some special thing in Leeds that's going on? Paul says everyone needs to make their own mind up about peer-to-peer, but group discussion definitely helps find the best platforms. Yeah, I was thinking also about, I used to have a forum that was connected to the website. I may relaunch that. I don't know if you would find a forum helpful. There's already a good forum out there. Forums are kind of a pain because they take a lot of time to moderate and to control. And I already have my hands full with the website and doing everything I'm doing. But if you think a forum would be helpful for you to connect with other investors. And I'm going to be doing a private Facebook group in the future where we can all discuss peer-to-peer as a group. So when I get back from the travel, 31st is supposed to be Brexit. Yeah, that's not going to happen. You can come and yell at me when I'm wrong about that, but I just don't see it happening on the 31st, but it's a special thing. Because this thing's gotten delayed so many times that it's cry wolf for me. I just think that date, there's no Brexit. It's not going to happen. They'll find a way to delay it. So it's not been on my mind. I can bring a crystal ball to look. Yeah, Boris says that it's do or die. How did Boris become the Prime Minister of the United Kingdom? It's almost as confusing to me as Trump. I don't dislike the guy. I don't particularly like him. I'm not a politics person, but I looked at him and everybody in England was so laughing about Donald Trump, saying, Trump's so crazy, and then we get this Boris Johnson who seems like he's a little bit out there too. So, but yeah, politics, you don't want to get into that. He said he would rather die in a ditch than delay it. Yeah, anyway. Once again, if you have questions that you would like me to ask the peer-to-peer companies when I go visit them next week, RateSetter, Cufflink, LoanPad, LendingWorks, Crowd Property, Cufflink. Did I already say that one? I'll be sending out an email too, so you can just reply to the email. So I'm going to wrap it up now. See if I have anything else on my notes that I noticed. Oh, let's talk about collateral for a minute. Somebody did ask me to talk about collateral. For anybody that's involved in collateral, There's been zero communication about the administration. That's because there's nothing to report. There's nothing to report. It's going really slow. The administration is turning out to be really expensive. This too will happen with Lendy. These administrators are charging high fees because that's what administrators do. When it comes to property lending, property-backed asset lending, you could see things take as long as, I would say, 8 to 10 years to finalize everything. You think about, let's say you buy a property loan, right? A property asset-backed loan and peer-to-peer, and it's a 5-year loan. Imagine this. Imagine if the loan defaults in year 5. They do the recovery. It could get delayed 2-3 years in administration more until it's sold. By the time it's sold and everything is worked out, you could be looking at 8 years. So don't be surprised if the collateral administration goes on for a long time. Same with Lendy. I don't think the Lendy's situation is going to be solved within a year because they've got some massive projects. I mean, you got that skyscraper in Liverpool. I don't know how many stories that thing is. That's going to be hard for them to either complete or sell. It could take them a long time to find a buyer. So unfortunately, patience is really the key here when it comes to these administrations. Hopefully we won't have too many of those, but peer-to-peer is risky in some respects. So collateral administration, if you haven't heard anything about what's going on, it's because there is no news. And it would be nice if the administrators would at least send out an update and say, we don't have any news for you for the last 3 months, but we want to let you know we're still working on the administration. They're not doing that, which is kind of annoying. They should. But it's going to take time. I don't expect to see that situation resolved anytime soon. So just my 2 cents. Let's see. Yeah. You're welcome, Martin. Thanks for joining us. Thank you, Chica Boy. Thank you for everybody who came on the stream tonight. You guys are the reason, and girls, women, men, are the reasons why I come and do this. I just want to give you as much information as I can. What negative interest rate in the ECB affects peer-to-peer business? Is institute investor will take better loan in peer-to-peer? Jan, your English is a little bit broken. I think I understand what you're asking. Negative interest rates. Well, the institutions are involved in peer-to-peer in some degree. Sometimes you just can't see it. Like Lambay has a lot of money from institutions, and some of the other companies are taking institutional money. What it essentially does is the more institutional money you get in peer-to-peer, your returns will fall. Institutional investors tend only to invest in lower risk because they can't take the same kind of risk with their clients' money, so they have to usually keep it in the low risk range. So when you get institution money, you will find that those institutions tend to go into the low risk products like Lambay. Hence, you'll get a lower return, which a lot of people, that's the one gripe they have about Lambay is the returns are too low. Well, because it's low risk and there's a lot of institution money. Don't know if that answered your question or not, but that's what I got for you. And if you have any last minute questions that you would like to answer, you want to know next week's lottery numbers, I do not have those, but if I do find them out, I will put lots of money into those lottery tickets and I will spread it out amongst all of you. It's my gift back to you. So, but like I said, I will be visiting next week in London, Rate Setter, Loan Pad, Property Crowd, possibly Easy Money, possibly Lending Crowd. Cufflink, and gosh, there's one other. Jonathan at Pioneer too. I believe I'm going to try to meet with him too. And I'm just going to ask them some Q&A. We'll do some videos, get some updates. Oh, Growth Street too. Growth Street. I almost forgot. So you may see me wandering around the streets of London with a video camera in my hand. If you do, say hi. I'll be zipping around on the tube before I go off on my holiday. So let's see. You deserve a test now. Thank you. Chica boy, I don't know what that means. Do I deserve a test? McTavish, you haven't told me if you're Scottish yet. I need to know that. I think that's a great name. If that really is your name, that's a great name. Why are some peer-to-peer companies hard to join with a lot of ID required? Money laundering. They don't want to get in trouble with the FCA. They want to make sure that you're not some terrorist who's trying to launder money through them. So they have different requirements. Some of it's FCA requirements. So that's why. I think if I was running a peer-to-peer company, I would want to have pretty good ID tests for people to join. Because, I mean, imagine if you take some guy who's laundering money, the FCA could probably shut you down. So I think it's not such a bad thing. It's kind of inconvenient, but, you know, it's like saying, well, when I go to the airport, why is there those security checks? It takes so long to go through the lines. Yeah, better to be safe, go through the lines than not to have that safety. Because I don't want a peer-to-peer company to go down, to be taken down by the FCA. Like Collateral was taken out by the FCA. They weren't having financial issues. It wasn't like Lendy. So I'd rather the FCA have those requirements in place for the ID checks, or for the company to have good protocol with their ID checks, than not have them. Do I have premium bonds? Oh, I don't, because the returns for me, when you actually calculate premium bond returns, I think I did it for my mother. She had some premium bonds, and we did some calculations on premium bonds. I have an article up on Financial Thing about it, but the returns were extremely low. So yeah, you get a bit of a tax break, but it's really not that significant. Thank you, Chris. Appreciate you joining us. Thanks for joining us. McTavish, no, not Scottish. It's from Call of Duty. I take the video game and not the old television show. I used to watch a television show called Call of Duty, so old American show. Jesus de Pablo. Is that an Irish name? No, I'm just kidding. Welcome. Sorry, just joined. What is my opinion on the Baltic peer-to-peer companies? Is it a good way to diversify from the UK market conditions? And Matt, you asked the same question. Yeah, so Bondora, Mintos. The only bad thing about that is you've got problems with regulation, because the Baltic companies are not regulated by the UK. So if you're a UK investor and you're putting money into a Baltic company, they have issues. Imagine if a Baltic company goes into administration, where does that leave you? Could be a difficult situation. Mintos stopped accepting UK investors. Things change. I don't think it's bad to diversify, but I wouldn't put a whole lot of money into Baltic companies. You do get a really good interest rate, but I think you're taking on more risk. So as long as you're aware and you diversify part of your portfolio into Baltic, but make sure you also have a good mix of other peer-to-peer companies and then peer-to-peer loans within those companies, I don't think it's a terrible thing to do. It can boost your portfolio return rate. So yeah, not bad. Let's see. Yeah, so I would actually consider going back into Bondora. They're a company that I exited out of a while ago, but um, they seem to be okay. I don't know if any of you are in Bondora. I like Mintos. Yeah, I would like Mintos to be set up in the UK. I think they would do well. For anybody that doesn't know, too, Mintos is an aggregator website. They don't actually underwrite their own loans. They just have a bunch of loan operators who list their loans on Mintos platform, which I like. But they got a huge operation there, so I would like to see Mintos open it up again. Yeah, Chris, I agree. It's premium bonds, you are looking at a very low rate of return. So I think you're better off chucking your money into a savings account or I personally put them, when I sold my mother's premium bonds last year, I made her get rid of them all except for, she wanted to keep £100 worth because she likes to gamble. But when we did calculations about how much she'd made over the years, it was a 1.5% or something like that. She never won anything big. Yes, you do have the odds of hitting the big premium bond jackpot, but mathematically, you play the Euro Millions because it's the same, same odds, right? Or probably worse. 136 million to 1 to win the jackpot exactly. So you're likely going to be in a return of 1.5%, 2% on your premium bonds. So, I personally don't like them. But yeah, I like that too about the Mintos loans. Some of them are guaranteed to be bought back if they default. You know what? I hate the word guarantee though, because how can you guarantee something like that? If that company that's offering a loan guarantee goes out of business, there's no guarantee. And I think the guarantee should never be used in peer-to-peer lending or any finance company, but there is that. Martin, thank you for joining us. Appreciate your participation and have a nice day too. Have a nice evening in Leeds. All right, well, I'm going to end this stream. I've been on here for an hour and 12 minutes blabbering away about peer-to-peer, and I'll do another stream maybe when I get to London next week, and we'll have a discussion about the companies that I've been to see if we're any further with the Brexit. But thanks for joining me. Please check out the website. Please like the video. Hit that thumbs up for me and hit the subscribe button. And that way you'll get notified next time I do a live stream. If you liked it, if you hated it, tell me you hated it. Leave me the comments. I love feedback and criticism. You're very welcome, everybody. Have a good one. Speak to you soon. Take care.